Jumbo, welcome to Beyond 60. Victor here, and I'm all about redefining your retirement goals. In today's episode, we are going to speak about what customers and advisors should talk about. In our last episode, we actually talked about the industry, and I actually mentioned that it is important to find an advisor. So, in this episode, we're just going to talk about what do you really talk about? What is it that you should talk about, with your advisor? Once you get your advisor, or maybe when you go to an insurance firm, or maybe you meet somebody who is trying to sell you an insurance product or a retirement product per se, what do you really talk about? That's all we want to discuss today. And my whole essence is so many of us don't know how to talk about. And for us marketers, boy, we can talk. Tunaweza ongea, and we can really convince you to do something that maybe you are not able to understand properly. And then you end up doing something that inafika katikati, there's no consistency. So to me, I view it as you better even not save or start saving. But I like you for us to go to this journey together. And if you want this kind of advice, give me a call or drop me an email. We'll be able to secure a meeting. You will be able now to have a proper conversation, and just without any product, without me selling you any product. I'm not coming with selling you any product. No, I'm not doing that. But I want you to go home knowing I want to do 1, 2, 3, 4, 5 towards my retirement. So what are those aspects that you will want to know about? Number one, you have to look and determine what is your age. You and your advisor, you have to figure it out. And these questions you ask yourself: how old am I? So when you answer that question, then that will give you how many years you will want to save for retirement. When you answer that questions again, it will give you how much will you be able to save, right? And then I will be able now to give you either long-term and short-term goals. In these economic times, it can be hard sometimes to even think about even the short-term goals. But I always say, there's nothing that is too small. There's nothing that is too small. A big journey can only start with a step. Take that step of starting, then go improving. When you have a baby, he doesn't just wake up. He doesn't get to the word na ako huko mbio zake huko zi. He's able to nurture. First of all, he is born with the legs. The baby is born with the legs, but the legs at that particular time does not help. But it doesn't mean he doesn't have the legs. That's all I'm saying. So you might not have been able to save. You may not be in a position to start saving, but you still have the legs to go up to retirement. That's all I'm saying. So determine your age factor. So if you, for example, you're 30 years, you don't have to retire at 60. So many of us have that notion you have to really this. That's why I say we want to redefine this thing called retirement. It's not supposed to be. I know even the channel is called Beyond 60, but it's not really necessarily have to be 60 years. You can decide even to retire at 40 and you're okay. I mean, if you're able to sustain yourself, then why not do other things? There are so many things to be done. This generation is not in a position whereby we are able to just be confined into one room. We are creatives. We want to try new things. That's why I'm doing this video for now. I'm not trained to be a video editor or a video content creator, but I realize I can talk, and this is the best channel I can do it. So why can't I just do it? I'm always doing presentations each and every episode. So I'm just taking that as a way of presenting my case. If I'm able to give up a situation whereby so many other people are listening to me, that I'll be so honored. So if you look at all that and then you determine your age factor, you have the years of saving up. One advantage that so many youths look down is you have so many years. It's time. We look down upon time. Time is very, very important in your journey to retirement. So at the end of the day, you have to figure out, you and your financial advisor, to be able now to determine what kind of abilities do you have and what kind of amount you can be able to save up for it. So if you want more of this, you can always reach me out. We can always have a conversation on it. In the near future, maybe we'll be having blogs, or we'll be going live to discuss some of these issues that are really touching. And at the end of the day, we'll be able to learn something. Number 2, what you really need to discuss about this person is your budget. Your budget will be very key, because at the end of the day, you have to be able to save up. You must have that ability. And not only that, have that ability, but as per se, is also to make sure that you also have an automation way. If you, by the way, you can have an automation in such a way that you automate this money, hii pesa ikufiki, as in you can just automate it as you go by towards your retirement, either through a bank, or your employer, for example. There are so many other products that we can structure in between. And even for employers, if you want to have a situation whereby your employees save up something for themselves, it is important to let them have this conversation. Let them have this conversation, and you can always again reach us to us. We can be able to offer that service as well. We'll be able now to come in and teach your people what's the really importance of saving up for retirement. So budgeting again is very, very key in ensuring that you have that consistency, in ensuring that when you're discussing things with your financial advisor, tell that advisor, there's some amounts I can't make. I can only go up to 1,000. I can only go up to 10,000. I can only go up to 10,000. But make sure, even as you do that, ask the advisor, what is the expected minimum returns? That's number 3. What is the expected minimum returns? Because that will be very, very important in determining, in seeing value for your money. Don't just put your money just for the sake of putting it, because you just have to secure it somewhere. Know how much it is earning, how will it earn, how is the process of the money, how does it work. And that is why I started by saying it is important to know how the industry works, so that you are not taking advantage of some of these situations. And when in the event of something like that happens, then you know who to approach to, because you have to really understand that having a financial guidance to these things are very, very important. We don't want a situation whereby we have created a situation whereby there is this notion, retirement ni waongo. When they comes to pay, it is because sometimes even you as clients, you don't take time to read all those things. It is important you read them through. If you need to a second party or a third party before you sign it, please do take your time to really understand. But the most important thing is, don't just take your time and don't do and do nothing about it. Take your time and do something about it. That's the most important thing. So as you go by, understanding your goals when planning for these things is also very, very important. So make sure the financial advisor and yourself are in one cohesion, to make sure that you have the same goals in attaining that. Because at the end of the day, me as an advisor, I'll be able to give you, I'll be very honored to see that you have achieved your short-term goals or your long-term goals. Together, we move together. we move and say, now, hey, so you push this thing to this amount, so you push this thing to this amount, and then we are able to have a solution in such a way that you're able to have a goal that is achievable. We don't want to be unrealistic in saving up towards it, and that is one of the reasons as to why the coverage again is still very low, because advisors and the customers are not able to understand. Another thing is the savings timelines. Those are very, very important aspects of saving timelines. Have like 3 years, 5 years plan. I know this generation, we don't want to be told 20 years. You have to create something that you are able to see, something tangible, something that you can be able to touch, and plan yourself better. If you're able to get maybe a car in the next 5 years, you save up to it. You can now even do a loan towards it. Maybe you do a down payment, then you're able to do something. That's why I said loans are not bad, but if you know how to handle your loans well, they can really again help you. Another thing that is very, very important that I think customers and advisors are not talking about is the impact of your golden years. Everyone wants a comfortable retirement. Everyone. No one will sit here and say, I just want to have a mediocre retirement, or on my gold sunset years, I'll be able to stand out. I'll be able to, come up with a retirement that is not comfortable. Everybody wants a retirement that is comfortable. But then again, still 3 things will stand out at that time and that topic. 1 is the investments, and 2, your budget at retirement now. Because remember, when you're discussing this time, you're discussing when you're young. So you also discuss your budget now and your budget after retirement, so that you're able to intermarry the two, so that whatever you're saving now can be able to give a situation whereby we have a situation where we have a budgeting kind of way of saving up. You know what to do, you know what investing is all about, you know how the budgeting is all about. You'll also speak about the health aspect of it and also the social life. Balance all those things together so that you are able now to realize your retirement goals. Discuss all these things. Most of us will not take time and discuss all these matters, and you find we get into scams that we do not even know where they came from. You're wondering, what was I thinking? What was I thinking doing such a deal? It's because sometimes you don't take time to think about it. But sometimes we take a long time to think about it, then you don't do anything about it at the end of the day. So you start saying, and by the way, I thought about that thing 2 years ago, but I haven't done anything yet. That is now the conversation that normally comes in. So to cover all that, make sure you understand that. And there are other topics as well to be able to, for you and the customers and the financial advisors to be able to sit back and think about. Another thing that I think we should think about, and even now the regulators should think about, is how do we make sure that the customers understand the way the money works in the retirement industry. That's a big role of the regulators in our countries, for example. So at the end of the day, make sure you understand before you start saving. Make sure you and your advisor are able to elaborate all these factors to be able to come up with an amicable solution towards your retirement. As I always say, as I finish, this is a comfortable way of starting. Don't look at your age and start saying, it's a long time. The only advantage that you have is time. Take advantage of it. You can either win it or you destroy it. But remember, this is your own personal responsibility. So if it is your personal responsibility, take time to learn about it. Know where this money is going. Know the institution that is taking up this money. And know the consequences. Speak about whatever the retirement is all about during your years of working and after. Determine both budgets, then see how else are you able to navigate the two, and determine your health, and determine your investment and your expenditure at your retirement years. So as you think about that, let's roll it out and see how else you can be able to save up. You can hit me up on the comments below. You can show you can send me an email. You can comment, or you can subscribe for more information on this channel, and you'll be able to learn a thing or two. Remember, your wish is my command. God bless you.